Dear students, I am Dr. Chandrakanthan, G. Assistant Professor, Kristu Jayanti College, Autonomous, Bangalore. I am going to discuss about chart of accounts and general ledger. Let's have a elaborate discussion on this particular topic. First, we will see the meaning of general ledger. See, if you take a ledger, the main or core or the base, if the base is get collapsed, the entire thing will be getting collapsed. So that's the reason we are discussing about this ledger. For accounting, it is so important. If any communication gap or wrong information is conveyed, it will collapse the entire system. It will lead to affect the organization. The financial things will be get affected. Right? So that's the reason we need to know about very clearly, thoroughly about this particular topic. All right. So generally in the ledger, in the sense, a complete record of a company's transactions over a period of time, documenting changes to assets, liabilities, equity, expenses, and revenue. All right. See, this ledger is the principal book or final book under double entry system. So it record all the transactions and it will be classified on a particular basis, chronological basis. That is needed. All right. So it has some sort of a characteristics. Let's see one by one. Major or principal book of accounts. So it plays the major one related to the books of accounts. All right. It have a index because with the help of index we can easily identify where it will be available. All right. And if you take a pages book, all right, every account one separate pages will be have in the ledger. So we can easily identify everything. All right. Then one debit and one credit will be there. For every transaction, one account is debited and another account is credited. That will happen. The next character is books of final entry. All right. See, the ledger is the last stage of daily accounting or bookkeeping, because from this stage it will be moved. For example, one transaction is happening, so we will enter into the ledger. All right. So this is the last stage. So from that last stage, we will move to the next one. Okay. All right. The next classification is next characteristics is classification of transaction. While a journal, a bunch of various accounts, ledger is the classification of these accounts. So based on the ledger, we will classify. It will becomes to this account. It will comes to this account. For example, sales, purchase, wages, rent. Likewise, we will classify. Okay. All right. So as per the ledger concerns, it has some sort of advantages also. Let's see one by one. Knowledge of account. So we will know that what are the accounts are available over here, and we will come to know about the details of income and expenditure. We will came to know that what are the income we have spent on a particular period. For example, in a day, in a week, in a month, in a year. Likewise, we can know that. All right. And it helps us to know the financial position of the organization. All right. Whether the organization is going on profit or loss, or it is going on a particular consistency is maintained on a particular level of growth, 10%, 15%, likewise. All right. We will get the accuracy from this information. All right. We will come to know the profit and loss. All right. And we will came to know about the knowledge of time. We will know about the assets, liabilities, how much of assets we have, that what is the value of assets we have, that what is the level of liabilities we have, whether the liabilities decreased or increased compared to the last year. Likewise, we will came to know that. All right. And it helps us to assess the overall position of the business. All right. And it is a proper evidence for the business disputes. All right. Let's see. we must know the difference between the journal as well as ledger. A lot of differences there. So we must know that. Let's see what is the difference between the journal and the ledger. All right. So as per the nature of book concerns, the journal it is the book of first or original entry. If you take a ledger, this is the book of final entry. Journal, it is a beginning. If you take a ledger, this is the final entry. Record, if you take a journal, so it is in the chronological record. All right. But ledger, it is a book of analytical record. Okay. Then weight in legal evidence. Okay. As per the journal concerns, it is a book of source entry and has a greater weight as legal evidence. It has a lesser weight as legal evidence as it is based on journal. All right. Then classification of data. The unit of classification of data within the journal is transaction. But in case of a ledger, the unit of classification of data within the ledger is account. All right. Then process of recording. The process of recording in the journal is called as the journaling. But in case of ledger, it is called as the record. It is called as the posting. The process of recording in the ledger is called posting. Place more than one transaction regarding one account or written at different place, date wise it will be entered. But in the ledger, more than one transaction regarding one account are written at one place. Okay. All right. So here we must know the equation, accounting equation. So assets minus liability equal to stockholders equity. So this accounting equation we must know about it. Okay. Right. Next one is the categories. If you take a ledger, you do have a different categories. So here we have the 5 categories: assets, liabilities, equities, revenues, expenses. All right. Then let's see one by one in depthly. First one, if you take assets, assets are resources a company can use to generate revenue. It's a true, it's a fact. So what are the assets we have? So based on that, we can mobilize the revenue. For example, if you take a Walmart, he invested a huge amount in real estate. Through that, he is mobilizing, he is generating revenue, rent, lease amount, likewise. Okay. So these assets may include cash, copyright, equipment, inventory, investments, patents, property, trademarks. All right. So in businesses can categorize assets by the year short term or long term. I told that the assets is the first category. So it includes these are the things. All right. So in the business, we have that short term as well as long term. The assets will be used for long term as well as short term. And we have that long term as well as short term assets. Okay. If you take a short term assets, it includes cash, accounts receivable, prepaid expenses. All right. Because why we are saying that it is a short term assets? Because it expects to consume those assets within a year. Within a year. Okay. The company expects to consume those assets within a year. For example, if you take accounts receivable within a year, if you take a prepaid expenses within a year, it will be settled down. Okay. All right. Let's see the long term assets. Land, buildings, computers and softwares, because it will be used more than 1 year. Beyond 1 year we will use that. Okay. All right. Next comes the, like short term and long term assets, the businesses it have the tangible as well as intangible assets. Okay. If you take a tangible assets, we can say that land, equipment, right? See, it have a value based on the purchase. All right. Next one is the intangible assets. Licenses, copyrights, patents. All right. See, only if the people or the proprietor acquired, then it will be get over. All right. The next category is liability. All right. So liabilities are legally binding financial obligations one company owes to another business or person. I have to give it to another person. All right. Okay. So in the businesses, all right. So businesses increase their liabilities to fund everyday operations. Okay. All right. So how we can settle that? To settle liabilities, businesses must pay cash or transfer assets to the company or individual. Okay. So it will be settled. So like assets, here also I am going to give some sort of examples: bank loans, leases, mortgages, payrolls, taxes. All right. The next category is equity. All right. See, what is that equity? It's the difference between total assets and liabilities. All right. It's a net amount found by subtracting the total amount of your money a business owner has invested in your business from their total earnings. I'm giving you an example. If a company sells all its assets for a cash to pay off liabilities, all right, any remaining cash is considered as the equity. So simple. The remaining that I have, it is considered as the equity. So always keep this equation in your mind. So equity in the sense, so it's a difference between the total assets and liabilities. Okay. All right. So this equity, which is include common stock, bonus equity, retained earnings, treasury stock. Okay. All right. The next category is the revenue. Usually, when we will get the revenue, if you sell something, we will get the revenue. Okay. Right. So revenue comes from a company's sale of product or services. For example, if I am a manufacturer of toothpaste, so by selling the toothpaste to the general public, I will get the income. Revenue will come to the organization. All right. Suppose if I offer some services to the organization or people, the income will get into the organization. For example, hospitality. If you take a hospital, if you take a hotel, so they are offering the services, accommodation, food. So based on that, the revenue will be get into the organization. Okay. So revenue, how it will comes that? Interest income, royalties, sales, service fees. If for example, if I am giving a service for two-wheeler service or car service, all right. So by doing the services, the organization, I have to pay amount to the concerned showroom, all right, or service center. So that income will be the amount that I am paying. It will be considered as an income to the organization. Okay, all right. The next category is the expenses, the last one. See, usually what we think that expenses in the sense it will be goes out. Okay. Sometimes it helps us to give revenue also. The lease on a building or the cost of utilities each month. That's it. Expenses also related to assets. On expense can also take the form of an assets depreciation, which your business calculates over a time. So for example, I'm purchasing some particular machine. Through the machine, I can generate revenue. All right, but at the same time, so actually I'm investing some amount, it's the expenses, but through that I'm generating revenue. All right, I'm paying a rent, I'm paying salary. So through that I'm revenuing. For example, 1,000 employees, I'm paying salaries. Through that I'm generating the revenue. All right. Then components. The ledger have four main components: journal entry, description, debit and credit column, balance. Okay. All right. So what is a journal entry? It's information about each journal entry posted to an account under the entry date. For example, cash sales made to so and so company. Which date it is posted? What is the account? Sales account, this one. Alright. Cash sales. Description in the sense, a brief explanation. Cash sales made to so and so company. Likewise. Alright. Then debit and credit column. Alright. So either we will put it in the debit column or we will put it in the credit column. Okay. The next component is the balance. A balance is kept for each account. Okay. Each account, at the end of each accounting period, the ending balance will be calculated. Okay. Alright. Let's see the functions of general ledger. See, without the general ledger, it is not properly able to prepare proper general ledgers. Without this one, it is not possible to prepare trial balance. Financial statements, trading, profit and loss account, balance sheet, it is impossible to prepare without the ledger. Alright. So it will tells that, so it will give the day-to-day activity, each and every day, what are the transactions which has happened. Alright. So which are the expenses which is incurred more. So those information it will be gives us. Alright. Okay. So these ledgers, it helps in keeping a complete audit trail sequentially and logically. We can verify. Alright. And we can go with the accounting norms also. Alright. So here internal audit will be there, external audit will be there. Okay. Sale, purchase of goods, revenue, expenses, stock movements and profitability of different years can be compared on the basis of trend analysis. Already I told you. So in this expenses, how much of, for example, miscellaneous. So miscellaneous expenses, last month, how much of amount it is spent. Yearly to that last month, how much of amount it is spent. So likewise, we can analysis. Alright. So we can also ascertain the trade credit as and amount receivable from debtors. Those things also we can identify. Okay. Alright. So how much of amount we need to pay as a tax. That information also we can identify through functions. Okay. Alright. Next one is the format for general ledger. Alright. Let's see the format. So if you take a general ledger, this is a format. Some of the companies, based on their requirement, they will put it in a different way. So general ledger, it have that page number, account, and apart from that, date, description, reference, debit, credit, whether the amount is going to debit or credit. That information they have that. Okay. All right. So this is one more format also. Name of the account number, date, explanation, reference, debit, credit, balance. Likewise, it will be goes set. Okay. All right. So account, in the account column, it mentions the account type. For example, here I mentioned as cash account, sales account, purchase account, likewise. Okay. Account number and page number. So it will have that account number. For example, yes 001, 003, 004. So S in the sense sales. For example, purchase. So purchase P. So when they are looking into the account number, so they can easily identify. So S in the sense it will comes in the sales. P in the sense it will comes in the purchase. Likewise. Okay. All right. So relevant entries need to be entered here to favor easily completion. Date, on which date it is the transaction was happened. Okay. Description. So it will give the elaborate information about the transaction, cash transaction or purchase, credit transaction, to whom it is sales, whom it is done. So those things it will be happen. All right. Debit amount, all the debit entries of the account need to be recorded in the column. Credit, all the credit transactions will be entered over here. Okay. All right. The next comes the posting. All right. So when the transactions entered in journal or recorded in the ledger is called as posting. All right. Transaction entered in journal or recorded in the ledger is called as posting. All right. So we can say that otherwise, process transferring the debits and credit of journal entries to the ledger account. Okay. All right. So this is a procedure for posting, opening of separate account. All right. Posting journal entry to the concerning side, then sides to the posted, on which side it's supposed to be enter credit side or debit side that you supposed to specify. Use the word to and by, right? So whether we need to mention whether to or by. So what is a to? So to is prefixed to the posting of debit side, and a by which is for credit side in each account. Okay, all right. So ledger posting of opening journal entry. So how we can go with it? How we can opening a journal entry? Okay, right. While making ledger accounts of assets and liabilities appearing in the opening journal entry, opening balance as represented in the journal entry must be shown in the beginning of the ledger account. A to balance brought on at the debit side for assets, and a by balance brought on at the credit side of liabilities. Okay, right. Then, so earlier that we are seeing that how the journal entry will be opening. Next one, balancing of ledger accounts. Okay, all right. Assets, liabilities and capital accounts have certain closing balance of the end of the accounting period. So what we will do that, we will carry forward this to the next one. Alright, so at the time we will use the word by balance brought down or to balance carried down. That is the word we will use that. Okay, alright. Then, so we will use that by as well as do. Okay, alright. Then, so while closing these accounts, we will write the balance carried down. Alright, so to show the closing balance of the account. While closing nominal account are those accounts which are either on expense or revenue. Okay. See, we do not use the word balance carried down because the balance of these accounts need to be carried forward to the next period. Okay, right. So this is the expense of the business, so it should be directly posted to the debit side. So which is expenses, all right, whatever has been paid on account of expenses has been paid once and forever. So that type of expenses, what we will do that should be directly posted to the debit side of the profit and loss account or trading account. In the same way, account related to income or gain or revenues are also closed by transfer to profit and loss account. Okay, receipts, that is rent, interest, discount or revenue of the business. So while closing these accounts, the balance will be transferred to profit and loss account. All right. So these things supposed to be keep it in your mind. So how I can prepare a purchase day book I can prepare. Okay. This book is maintained mainly to record credit purchase. So these are the things which is have a date, particulars, name of suppliers, invoice number, ledger folio, amount, net amount. Okay. All right. Sales book, date, particulars, name of suppliers, invoice number, ledger folio, amount, net amount. Okay. So purchase return book or return outward. So here date, particulars, debit note number, folio number, amount. Okay. All right. Then sales return book or return inward. So here also the same thing. So over there we are used debit note. Here we are using the credit note. Okay. All right. Then how we can prepare books for a bills receivable. So date when it is received, drawer, acceptor, where payable, date of bill, term, due date, then folio number, amount, remarks. Okay. Then bills payable, almost the same thing, date of acceptance, to whom it is given, payee, where payable, date of bill, term, due date, ledger folio, amount, remarks. Likewise it will go there. Let's see one example. On May 15, 2024, an MNC sold goods to customers for cash rupees 5 lakhs. So how it will be the journal entry? So date, account and title, debit, credit. Alright. So 15/5/2024. So cash account, debit 5 lakhs, sales, credit 5 lakhs. Okay. So since amount is came, so we are giving it a cash debit under 5 lakhs in the cash, and sales amount is coming there. Okay, right. So in the particular account, if you see that cash account, so May 15th it is 5 lakhs. In the sales account, on the another side it will show as a amount. Okay, all right. So with that, we are come up end up with this particular lecture. We will meet again once again in the next class. Thank you.